We have a big week ahead of us this week with earnings coming out, the CPI report, lots of action in the markets. So let's take a look at what is going on. And markets, traditional markets are a little bit down this morning. The futures are down as we as investors are looking to the inflation. That was the narrative on the talk shows all weekend, was that we are expecting a higher inflation report. And that's the reason commodities are tanking because of recessionary fears. Obviously, commodities shot up when Russia invaded Ukraine and inflation reports started coming out. That was a flight to safety. And obviously the inflation play as commodity prices surged and, the inflation play went up, ETFs, bonds, all those other things, or not bonds, but ETFs and stocks in the commodities sector. So commodities have been tanking lately because of recession fears. As you've seen, gas prices have come down a little bit at the pumps, but they're still twice as much as they should be and are putting a lot of pressure on the consumer. So markets are forward looking, flight to safety. Now, other sectors to invest in terms of inflationary pressures that are coming around, and bonds are always a place for money to go. As you can see, bond yields have been, bond rates have been up the last few days because of the fears of recession. And, stocks are going down because earnings coming out and the inflation print that's headed our way. So right now it's a big week. We just got to keep an eye on the data. If inflation comes out hot, obviously we'll see a drop. We'll take a look at the charts in a minute. It's been pretty predictable each time in terms of the leveling down that we've seen in the markets off of the inflation print and the Fed action. They're going to come out minimum 75 basis points. If inflation is really hot, they might come out with 100. Markets will react to it. And then obviously you'll see the buy the dip action that will come in as markets continue to digest the longer term effects of the recession and what that's going to look like. Nobody knows. How deep is it going to be? How long will it last? And of course, there's fears in China with COVID popping up again there and more lockdowns potentially. So those are weighing on the market as well. And globally with this new variant that's out there that, is causing some shutdowns in China and some other countries. So that still is on the radar. They could, create some pressure. And then of course we have Elon Musk playing the Twitter games and, pulling out of the deal. So we'll see how that all shakes out. And then of course we still have all of the things going on with Celsius and 3AC and these other groups that are trying to unwind the mess that's going on. Celsius has changed the legal team from restructuring to a bankruptcy specialist as they are going to enter a bankruptcy proceeding. They've been liquidating assets and paying off loans to try to free up collateral that they have with Bitcoin, wrapped Bitcoin and other assets. So it'll be interesting to see how this plays out. Simon Dixon's been out all over the place in social media lately, interviews, podcasts, Twitter spaces, talking about restructuring plans and, the group that he's brought together to try to rescue as much of the assets off of Celsius as possible. Unfortunately, no matter what, this is going to end up in, pennies on the dollar for people that had staked assets with Celsius, as these types of things tend to do. Voyager is going through the same situation right now. And they, Celsius hired the same legal team as Voyager. So very interesting there. All of these companies are just joined at the hip. They all lent to each other, borrowed from each other. Really interesting times in the space right now with what's going on. And then CoinFlex is taking legal action over what was it? The investor that they had that deal with. Crypto exchange CoinFlex is seeking over $84 million from a single customer as it talks with another exchange to enter a joint venture over it in order to revive its business. And Roger Ver, that's who I was trying to think of, that whole controversy with Roger Ver. And apparently nothing was in writing. So really interesting, to see what's going to come out of that as well. And so let's go ahead and take a look at the charts here and what we've been watching. So obviously, this has been a level with Bitcoin, a level down situation here as it's been kind of, unwinding from the top. And we started to get these recession and inflation and recession concerns and the Fed taking action. So we've been really watching, especially lately, these last couple of moves as inflation prints come out and the Fed, takes its action on that news. And this has been, very steady unwinding in levels. So what we've seen here is the number of days it's basically taking, is pretty consistent. So this right here is basically, price was consolidating about 23 days ahead of the Fed, the inflation reports and the Fed action right here, 28 days. And currently we have the inflation coming out this week, Wednesday. So, again, basically another, 28 to 30 days. So this has been very consistent, very predictable in terms of the amount of time it waits for the price consolidates, waits for the report and the Fed action before it takes the next level down. Very, controlled, predictable unwinding here, a little bit of liquidations going on. This price action looks, a lot like this over here. Of course, you had this long and short liquidation action here, had a little bit of it going on here as well. So let's take a look at what we can expect potentially, based on all we have is what's been happening to kind of get an understanding of what we can expect. So if you take the base, price levels, that's about a 24% drop there. And if you take this base price level here, where price consolidated, again, that's about a, 33% drop there on that last one. And so let's see where that would put us here if we dropped, 20 to 30% from this base level of support. Maybe it's around, right in there. So let's see what that does. So 20% drop would be 15,000, 25% would be, in the 14,000 range, and a 30% drop would be 13,500. And as we've looked at, there is a lot of technical confluence for those levels. This next level that we're breaking through right here, if that breaks, then you have a little bit right here at the 15,000 level. And then your next stop is a little bit right here in that 13,000, then ultimately back down to that 12,500 range that, we've kind of been talking about and been targeting. A lot of technical confluence for those levels if the price does break. So this is Bitcoin on the daily here. So the other thing that we have, obviously, that we've been watching is the weekly chart and the 200-week moving average that the price is continuing to stay below, as you can see right here, which is right around that 22.4 range. So until the price gets back above the 200-week moving average, there's really not a whole lot of upside potential to look for as price kind of continues to consolidate below this level and in that range. So, we'll just really have to watch that 200-week moving average and see how long it takes price to get up above there. That's unprecedented. We can go back and look at it again. In Bitcoin's history, it's never really done that before, stayed below that 200-week moving average for any length of time. A little bit of wicking below, but immediately shot back up. And, obviously that was the pandemic with a V-shaped recovery after the 2018 bear market, a little bit more of a sideways consolidation. And, this is really what you have to expect at this point. Maybe we're in this area here if you want to compare charts in terms of the working its way down. But at the end of the day, this is a different environment. A lot of people in the space, a lot of people you see doing technical analysis on YouTube and things like that, the commentators and people writing articles, they've never been through a true macro bear market before, ever, much less in Bitcoin. A lot of the people investing in Bitcoin came in 2021. So they didn't go through these cycles. And, I've been observing Bitcoin, since these areas back here in that 2014, 2015 through 2018. And then I got involved, as an investor here, but I was watching this, and obviously I'm an investor in businesses, real estate, and other things, going back to 1997. So I've been through many cycles. And, at the end of the day, what it all boils down to is, it's really inflation, recession, and what the Fed does in response to those things, that's controlling, the price action. And if you look at traditional markets, you see the same thing in the traditional markets, kind of doing the same thing, leveling down each time ahead of, what the Fed does and the inflation prints that we're looking out for. It's very controlled. You get your little bounces after everything happens. So, the last time, this is on the daily, June 10th was the last print. So that was this area, and it dropped after the inflation print and the Fed's action, and we had the bounce. And then, had another little downside based off of other news, in the industry. Then, buy the dip bounce. And then, of course, waiting for the inflation print to come out and Fed action. And, obviously what you can expect is more downside as the market continues to kind of unwind. These things don't happen overnight in traditional markets. Happens a little bit faster in crypto. But let's take a look at Bitcoin, because this was the last print right here, June 10th. Then the Fed met 5 days later, had the bounce on the 15th. after the Fed met. So the price unwound ahead of that. So let's just take a look at what that drop was. So basically on the 10th is when the inflation report came out. Price dropped initially 23% after the news. The inflation report and the Fed taking action on the 15th. So this time we have the price or the CPI is coming out on the 13th, which is right here. If price follows, it'll be right around this trend line, just like it broke last time on the news. And that's around, 19.9, somewhere around there. So if price drops, the same thing from there, 30%, puts it about 13, 14,000 if it drops that much based on the news. Let's look at that again, where that broke down from until the Fed did their thing. 20%, I'm sorry. So let's go back here and let's drop it, 20% from here. So that's, 16,000. So somewhere in that 15.5 to 16,000, I think there's a lot of technical confluence that, those are the next targets for the price if it breaks this 17.6 low that's put in. And then there's a possibility that it could, just drop down to that area, put in a double bottom and then consolidate from there. There's no reasonable expectation of a V reversal right now and heading into, new all-time highs and things like that. I know there's some, people out there talking about that, looking for that reversal and price just moving on to put back an all-time high. That just isn't realistic or probable or likely until the Fed pulls the foot off the gas, inflation peaks, and we can start looking at the Fed pulling back or leveling off what they're doing. But the Fed has to get inflation under control. So, right now, this is a very controlled deleveraging, unwinding, and repricing until that happens. And typically, you can find some bottoms in bear markets when inflation peaks, when you're in a cycle in a situation like this, kind of like we saw back in, the last really big issue was 2009. That was a, financial collapse, recession was created by the financial collapse. And then, of course, the 2019 situation, the Fed rescued the markets there. And, we saw that big V-shaped recovery. But really, until until we get the reports that inflation has leveled off and tapered, then, the Fed can maybe start changing their strategy a little bit and start looking at, well, now we have to deal with recession. So it's one thing at a time, one level at a time that the markets are digesting right now. It was inflation and the Fed's response. And then the next thing to digest is recession. So we'll start to get an indication of what recessionary expectations can look like based on earnings. So not only what companies are releasing in terms of current earnings from the last quarter, but what their future projections look like. So that will give the markets a lot of guidance in terms of what to expect in an inflation or a recessionary environment. We already know inflation's put a lot of pressure on businesses and they're passing those prices along to consumers. The real question now is, what are the effects of recession? What does that look like? How is that going to affect things? And how long is it going to take to get through these things? So these are the things I'm looking at today. I wanted to get this out early before the markets open. We have about 20 minutes before the market opens since I've been recording this. And we'll just have to see, what that looks like. Again, markets are down, about 0.5% to, 1% up and down here. And we will see earnings will definitely move the markets. If we get some good earnings, markets will bounce. If earnings are poor, markets will drop a little bit. And then we get the CPI report. If it's better than expected, markets will bounce. If it's worse than expected, markets will continue their way down. If it's way bad, big drop. And then the Fed takes its action, and they will likely telegraph their move after the CPI report comes out, because they're not meeting until, I guess the report comes out the 13th. They're meeting 25th, 26th. So they've got a few weeks before their meeting to kind of digest what's going on. So volatile week for the markets. And these are the things I'm looking at. I'll see you in the next video.